What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Tuesday, everybody. Beijing has been relatively silent in recent weeks in regards to the tense situation on the Ukrainian border. In the event of Russian incursions into the territory, China would be in an awkward position indeed. On the one hand, Beijing seeks to maintain its current cooperative relationship with Russia and project an image internationally of confident friendship. On the other, non-interference is a core principle of international conduct that China promotes, and this is especially important for nations with which it shares a border. On this point, this morning, respected Washington-based China analyst Bill Bishop observed, quote, "It is very important for the PRC that there is a credible pretext if Russia attacks Ukraine, so they can dodge having to condemn the attack even if they do not wholeheartedly support it." End quote. What limited statements we have seen on Ukraine from state apparatus in Beijing have mostly been in response to international comments. For example, this is what Chinese Foreign Ministry spokesperson Zhao Lijian expressed in response to a Bloomberg article which claimed that it was, quote, possible Xi asked Putin in their recent call not to invade Ukraine during the Winter Games, end quote. Now quoting the spokesperson, quote, "Are you referring to the report by Bloomberg? The report was purely made out of thin air. It seeks not only to smear and drive a wedge in China-Russia relations, but also to deliberately disrupt and undermine the Beijing Winter Olympics. Such a despicable trick cannot fool the international community." End quote. State media coverage of the Ukraine situation has also been careful to frame it in a politically correct manner from Beijing's point of view. For example, yesterday, state-run Global Times published a piece titled "US Media Smearing China-Russia Ties on Ukraine Issue." Quote, "The military standoff on the Ukrainian border has reached a very dangerous point. No one wants to escalate this conflict into war, but conflicts could be sparked easily by accidents, and it's hard to fully prevent accidents in the intense standoff. Even if some conflicts occur in the coming days, Russia is unlikely to be the one to initiate provocations, since Moscow has previously supported the UN-adopted Olympic truce during the Beijing 2022 Winter Olympic Games, while some countries like the United States, the UK, and Australia refused to sign it." End quote. Next up, major economic, financial, and trade developments from China over the last 24 hours. As most of you know, in China, GDP growth follows politically set growth targets at the local level. This week, we learned that most provinces have lowered their GDP growth targets for the 2022 calendar year, yet another sign of recognition of China's slowdown. And this is coming even as some of China's poorest Han Chinese majority provinces like Henan and Anhui have proposed to increase fixed asset investment, that is infrastructure projects, by over 10% this year. Of the 30 provincial level governments who have issued growth targets for 2022, only Gansu in southwestern China has set a higher target, and Inner Mongolia in the north set the same target as in 2021. Beijing, Shanghai, and Guangdong have politically set targets of between 5 and 5.5%. Poorer and less developed regions have higher targets. As we've discussed thoroughly in previous episodes, if the property sector is not pumped back up, putting aside the risk of deep economic pain, local governments will have insufficient revenue from land sales to meet growth targets without turning to debt, something that we've already seen through the front-loading of specially issued local bonds. Yesterday, Monday, the State Council, China's cabinet, unveiled a, quote, general plan for energy conservation and emissions reductions during the 14th five-year plan period, 2021 through 2025, end quote. According to the document accompanying the plan, China will accelerate efforts to build and improve an economic structure conducive to green, low-carbon, and circular development in its ongoing anti-pollution fight to achieve its carbon peak and neutrality goals. Again, according to the plan issued by the State Council, by 2025, the country aims to reduce energy consumption per unit of gross domestic product by 13.5% from 2020, while keeping total energy consumption at reasonable levels, leading the world in energy efficiency, it claims, and controlling emissions from major pollutants in key industries. in what Chinese financial media outlet Caixin Media is describing as one step closer to unifying China's fragmented $20 trillion bond market. Yesterday, Monday, the People's Bank of China, China's central bank, and China's top securities regulator approved a new set of rules designed to further connect the country's two bond markets by establishing a mechanism that allows investors from one to trade on the other. Caixin Media reports that these measures for connecting the interbank and exchange bond markets, quote, mark the latest move in the nation's years-long push to unify its fragmented $20 trillion bond market, whose different rules have added to red tape for traders. End quote. The mechanism laid out in the rules will allow institutional investors on exchange bond markets, including qualified foreign institutions, to trade bonds, asset-backed securities, and other eligible products on the interbank market and vice versa. According to local Chinese research firm for coal logistics, most of the Australian coal used by steel miners that was being held at Chinese ports due to China's informal import ban on the material has now been cleared. However, the firm points out, quote, there's no sign that the halt on new shipments will be lifted, end quote. In 2 weeks, Beijing will become the first city in more than 120 years of modern Olympic history to host both summer and winter games. Beijing hosted the Summer Olympics in 2008, and on the 4th of February it will host the Winter Games. However, the atmosphere with these Winter Games is much different than back in 2008. Back then, the world watched a confident, youthful, and growing China with hopes of opening up. Now, a more inward-looking Beijing, facing a rapidly spreading Omicron variant, economic slowdown, and a much colder international environment, will host the Winter Games. Over the weekend, China warned foreign diplomats attending the Winter Olympics opening ceremony they could face 21 days in quarantine if they are deemed close contacts of positive cases in the audience. The International Olympic Committee announced that the organizing committee has decided to adjust the criteria for determining the nucleic acid test results for athletes at the Games. According to the announcement, under the new measures, only those with a PCR result that shows a cycle threshold, CT, of less than 35 will be considered COVID-19 positive instead of the original 40. And according to a Monday statement, the Beijing 2022 Organizing Committee confirmed 6 new COVID-19 cases on Sunday. They include one person who was either an athlete or a team official. Now let's end, as we normally do, with the latest developments in relation to China's ongoing Evergrande crisis. Quickly, if you're enjoying the episode, don't forget to hit the like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. China's 14th biggest property developer by contracted sales, Shimao Group Holdings Limited, is moving to offload 34 projects, joining a swelling group of developers selling assets in order to ease liquidity pains. This begs the question, at what point do these fire sales plunge asset prices? One reason prices haven't collapsed is likely the role that state-owned enterprises have played in buying some projects above market price, stabilizing the market in the short term, but adding to moral hazard and the misallocation of scarce resources in the medium to long term. The assets up for sale include residential, office, commercial, and hotel projects, wholly or partly owned by Shimao across 17 cities, including the capital, Shanghai, Hangzhou, and the Pearl River Delta. Shimao was asking for 42.2 billion RMB, approximately $6.7 billion, for 15 of the projects. 19 other projects are either partly owned by Shimao or in the early stages of development, and as such, prices have not been set yet. Shimao has been in trouble since November when investors became concerned about its liquidity crunch. In early January, a Shimao unit failed to pay a 645 million RMB loan, just shy of $100 million from a trust company. Soon after, S&P Global Ratings downgraded Shimao's long-term rating to B-, citing concerns with the company's liquidity situation. Now turning to China Evergrande itself, on Monday, yesterday, the highly indebted property developer requested more time from overseas creditors, quote, to formulate a debt restructuring plan that benefits all stakeholders, end quote, urging them not to take any radical legal actions. This was likely in response to the formation of foreign creditors into a body to bring legal action against Evergrande in recent days. We covered this in the last episode of China Update. According to Evergrande, it is drafting a detailed debt restructuring plan and is apparently actively maintaining dialogue with offshore creditors. So it says. The company faced coupon payment deadlines totaling $352 million on Monday, yesterday. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.